Hello there, and thank you for joining me, Fiona Cincotta, here at StoneX. Today we are speaking the morning after President Trump announced trading tariffs on America's global trading partners. We've got universal trade tariffs, we have trade tariffs for specific countries, and we also have with us our analyst at Forex.com, David Scutt, who will join us to unpack all of this and the latest market movements. Thank you very much for joining us, David.
Great to be here.
So last night, US President Donald Trump announced the latest round of trade tariffs that the government is applying on its trading peers and industries. Can you give us an overview of what's new and what the developments are?
Well, Fiona, he announced the largest tariff increase in the United States in over a century. And clearly, by the market reaction we've seen out there, far more restrictive than almost anyone thought, including myself. Really surprised at the actual size coming through, particularly in some of those very major trade partners such as China and the European Union.
So overall, what is the scope of the US tariffs on the rest of the world?
So to begin with, there's a 10% blanket tariff that's going to be applied to every single nation, which will kick in on Saturday. And then on April 9th, there's going to be 60 nations that are going to have that replaced with a high tariff rate on top of what existing tariffs are already in place. So it's going to be very, very messy, very difficult to go and see how it's going to be implemented in such a short period of time. And it's certainly going to go and have a very, very lasting impact on trade flows and economic growth in various regions of the world because of this decision.
So given what's been implemented and the president's remarks from the Rose Gardens, do you think there will be more to come, or is it going to be one-on-one negotiations to chip away at these burdens?
Well, just given the sheer size, you'd imagine it has to be part of it, a negotiating tactic. I always thought when they first announced that tariffs were coming in, that it would be a revenue source that could allow for tax cuts and deregulation to go and take place. But this has surpassed mine, everyone's expectations out there. The fact that it's so large lends itself to sort of the view that clearly Trump is keen to go and negotiate. The key question, though, is he willing to go and negotiate immediately? April 9th is not that far away. I suspect that it's going to be in place for some period of time, and it might take a fair chunk of time to actually get any deal put in place. But yes, I suspect it's going to be more. I don't think there's going to be any vast increase coming through already, because that could really go and tip markets and economies over beyond what we've already seen today.
And so what do you think of the chances of a broader recession for the global economy, given the steer away from trade and globalization?
Fiona, I think it's definitely higher than what it was this time yesterday. It's going to go and rewire the global economy. And if we don't see some of those nations hardest hit out there start to stimulate, especially when it comes to the fiscal side of the equation, it's going to greatly increase that risk. In the United States itself, we've already seen a lot of front running, a lot of demand has been pulled forward ahead of this particular announcement. What happens now in this quarter? You're going to have much high import costs coming through. Demand is likely to be softened quite dramatically. And you're not going to go and see any investment coming through at pace that's going to be able to offset that. So in the United States, clearly there's a risk that we see a downturn start to take place. And in other parts of the world, you've just lost your biggest asset when it comes to demand, the US consumer. So it's definitely increased the risk that we could go and see quite a sharp downturn without any additional stimulus coming through, particularly from the fiscal side.
Yeah, completely. It's a really interesting point, because not only do you have sort of that potential impact on earnings, but then there's also that secondary economic impact that we'll be watching out for as well. Do you think there are particular countries that are in a worse position economically, or with their position to or ability to negotiate, like China maybe, that economy is slowing and yeah?
Yeah, absolutely. My neck of the woods here in Asia is going to be really hard impacted by this decision. You mentioned China. The effective rate now is 65% tariffs on Chinese goods imports. That's huge. Donald Trump talked about it during his presidential campaign. Well, that's been delivered and then surpassed at this particular decision. The problem for China and other nations as well, and I will go and throw several European nations into this mix as well, is that they've got excess industrial capacity already in place, and they need to find a home for that capacity, where to go and supply into. So where is that going to be now? Once you talk about demand for the United States, it's going to be much, much weaker than what we've seen in the past. The only real answer is internally. And so that's why it puts the emphasis to go and start stimulating, and to start, particularly from the fiscal side, directing stimulus towards households to go and help mop up some of that excess capacity that exists.
Yeah, it's a really good point. And also, you know, the fact that we talked about China there as well, it's obviously in a very different position now than it was in the first round of tariffs, which were much smaller in comparison as well. Sort of domestically, the economy in China is in a much weaker position.
It is, and we saw back in that particular instance as well. Sorry to interrupt, Fiona. Yeah, we saw that instance as well back in the first round of trade wars in 2016, 2017, 2018, that the Chinese economy was similarly in a very, very weak spot. And that forced the Chinese government to go and stimulate. So I'd imagine we'll probably see something similar and then beyond that on this occasion.
Yeah. And given the shock and awe of Trump's tariff run just months into his second term, that's really pushed the markets to thoroughly discount this theme's risk through the future.
Look, that's the question. I think we can all be guaranteed that one way or another, volatility is going to be here to stay. The administration has made so many sudden and abrupt changes. You've got to expect that. It's going to be probably a permanent feature rather than just temporary. But the one thing that I would go and point out as well, that the opportunity still exists out there on the positive side of the ledger. What we're talking about here is a lot of negatives, but there could be a silver lining. I've talked about the stimulus side of the equation. And in the United States, of course, the tariff plan is only part of a multi-step plan to go and revigorate the US economy involving deregulation and tax cuts. Now, if that comes to fruition, that's going to be a lot more positive development for the United States economy. If that's positive for the US, it'll be positive for the world as well. But clearly, a lot of potholes to get through before we get to that particular moment.
Yes, definitely. And I guess there is a suggestion that this revival of tariffs will resuscitate the world's drive to reduce dependency on the US and attempt to sort of further diversify away from the US dollar. Do you think that's a viable risk?
I think it's a viable risk. I don't think it's something that's going to be realized in the very short term. But even today, you can see the reaction. So G10 FX, there's been a big move away from the US dollar. And I think that's telling. We're thinking about new bilateral trade arrangements between other nations other than the United States, potential economic growth divergence as well. So I think it is. And you look at the likes of gold in particular outside the fiat currency space, there's a reason why gold has been ripping higher for the better part of 2 years. There is a diversification push clearly underway. In terms of the fiat currency space, the question I'll go and raise about where is it going to be replaced the US dollar? Will it be the euro? Would it be the UN? I just don't see that at this point in time. There really isn't a viable option. So for the time being, the US dollar is going to hold on to that global reserve status. But no, the longer this persists, if it persists, the weaker it will become.
Yeah, excellent. No, well, thank you so much for joining us there, David. You've taken us through so much that we've had a look at and unpacked as far as the trade developments are concerned and the impact on the market. So thank you. And for more videos like this, please do subscribe below.